Pramod Patwari, CFO Balrampur Chini joins us now. Let's understand how things have transpired for the quarter gone by and Q4, what has been the picture. Pramod, good morning. Thank you for joining us. We'll get into specifics, but I first want to, let me encourage you to first understand from you the highlights for the quarter gone by.
So in this quarter, we have seen the all-time production as well as sales from the distillery division. So the legacy effect of lower cane crushing for the Balrampur, which was affecting our financial performance for last 2 years, has largely been taken care of. We were in a position to give a cane crush higher volume by almost 15% for the sugar season just concluded. And going by the initial estimates, what we are having, maybe next year we will see again an increase of 10% from here on. As far as the EBITDA number is concerned, though the margins were not up to our expectation, but in terms of absolute numbers, this has been the best performance of Balrampur Chini in Q4 as far as the EBITDA is concerned.
I want to understand the debt picture. Now, sugar prices are at a record high. Sugar realizations are at an all-time high. Ethanol blending is going higher. But your debt from FY21, I'm looking at a long-term debt, has gone to 617. Why is that?
So if you recall, last year we announced a Capex of almost 1,000 crores. To fund that Capex, we borrowed 500 crores. And most of that loan is having an interest subvention of 50%. So there is a natural reason to borrow the debt. As far as the short-term debt is concerned, this is a function of inventory. But if you see the number of short-term debt, which is at around 1,200 crores as of now, and if you compare that with earlier years, which used to be around 1,600 crores, so it is on a declining path. Last 2 years were very bad for us in terms of cane availability. So that was the result of lower working capital requirement as well. And whatever internal accruals we generated in last 2-3 years, a significant portion of that was into the system, lying in the form of lower working capitalization. So we decided to take a call that instead of putting money in the short term, we diverted that money into the Capex so as to fuel the future growth.
Walk us through how do you see this year's crushing season to be different? Because last 2 years, in a sense, the crushing season has been slightly subdued. Given that there is a monsoon or a El Nino impact, do you expect this year's crushing season to be another subdued year?
So as far as the sugar season 22-23 is concerned, we have completed our crushing and we crushed 1,030 crores quintal of cane, which is a 15% higher in terms of last year's performance. Planting with respect to new crushing season, which will begin sometime in the month of November, is almost done. And the initial estimate suggests that we are going with a 10% increase next year also. As far as the impact of El Nino is concerned, we still believe that it's too early to make any view on that. Let us wait for a month so as to have any conclusive evidence on that.
I also wanted to talk about, Pramod, was the revenue from distillery. And as we understand, that contributed about 21% to your overall revenue pie. Having said that, this is in comparison to 11% from FY19. Given that this segment is way more profitable than the sugar segment, do you plan to up it in your revenue pie, just strategy-wise?
Yeah, for the FY24, we are looking at around 1/3 of revenue to come from the distillery segment. But again, as far as the profitability is concerned, my submission would be it's an accounting function. If we assign a lower value to bagasse and molasses, the profitability increases or improves in the distillery segment. So from the analysis point of view, it would always be better to look at the company level, what is the performance of the company.
Fair enough. What about the company's Capex plans down the line? How much cane crushing capacity is it going to increase by?
In the next year, we will be having crushing capacity of 80,000 TCD. So the only expansion as of now, which is on our radar, is the expansion of Kumbi sugar capacity, which will go up from 8,000 TCD to 10,000 TCD. So that will cost us around 100 crores, which we plan to fund entirely through internal accruals.
We were were just chatting with you about your long-term debt. We understand that it's increased from 257 crore rupees at the end of FY22 to now 617 as of March 23. We understand that this is partially because of the Capex plans, but is this expected to rise further? If you could give us, some back-of-the-envelope calculations.
So it is not expected to increase further as we do not have any serious Capex in our hand. And out of this 618, almost 85 to 90% or maybe 95% will be repaid over a period of next 3 years. So we don't see long-term loan increasing going forward.
Also, sugar output this year so far is lower than the same time last year, as we understand. And we also understand that the government has undertaken steps to ensure adequate supply. Do you anticipate supply crunch and consequent price increases then for sugar?
So if this question is relating to the industry level, then I may comment that government is, we are expecting an inventory of around 6 million ton as of 30th September 2023. That will be 2.5 months of internal consumption. In our view, this inventory is sufficient enough. And as we discussed, impact of El Nino, it is too early to make any view on that. As far as Balrampur Chini is concerned, we are expecting a 10% increase in cane volume next year. Our sugar production went down because of our higher diversion towards juice-based ethanol as well as B-heavy. So 75% of our cane got diverted towards B-heavy route as well as direct juice route, which resulted into sacrifice of almost 2 lakh tons in the year gone by.
Are you expecting any favorable intervention from the government in the form of, say, an increase in MSP or higher ethanol prices? Do you think that could happen anytime soon?
So, as far as ethanol prices are concerned, these are a function of FRP. What we understand, there is a proposal to increase the FRP by 10 rupees for the next year. That will translate into an around 3% increase in the overall FRP. So that should get reflected in the ethanol prices. At least that.
All right. Let you go on that note. Thank you for clarifying with us all the latest within the entire sugar space and walking us through the outlook on Balrampur Chini. Debt will not increase as of now, a 10% increase in volume. That's what they're expecting. 409 on Balrampur Chini.